All right, I'm excited. This is going to be a fun one. Lots of people coming. Very interesting topic, very hot topic, obviously. Everybody wants to know what's up, how to get involved. And today we have some awesome analysts who can give us some pretty cool insights about it all. Um, so welcome everyone to this weekly MetricsDAO Twitter space. We'll be talking about LSD-fi, and as always, we apply a data-driven approach. So I'll be your host and moderator. I'm Helix, and I'm a big believer of making data-driven decisions and a big believer of innovation. And that's why I've learned the Web3 analytics landscape and all the relevant players in it. And now I help them grow and connect with the right people. So you can follow me for more of that, and you should also follow MetricsDAO. MetricsDAO is a community of Web3 data analysts, and with us, you can earn, learn, and connect. So we got paid analytics challenges, we got courses and webinars, we got a Discord, and of course, this weekly Twitter space on the hottest topics in Web3, approach with a data-driven insights from top analysts and researchers in the space. So who do we got today? We got Crypto Corio. This must be your hat trick, sir. Welcome back. Thank you for being here. On-chain data. I'm sorry. On-chain wizard, first timer. Very nice to meet, sir. Another newcomer is Dynamo Patrick. Very curious about your insights today. We got Banjio from Bankless HQ. We got Kunal Gu from Mazari Crypto and OX Omok from Nansen. Good to have y'all here. Please, gentlemen, tell us a little bit more about yourself. Um, what your general background, what you work on, what you do, but also specifically this topic. Take it away.
So I can start since you mentioned my name first. Hello guys, happy to be here. I'm Corio. So by background, I'm a data scientist and I'm involved in the space since 3 years more actively, and I do a lot of on-chain analytics actually to find what's trending, what's happening on chain, and actually report it to my audience on Twitter.
Yeah, what's up, guys? I'm On-Chain Wizard. I've been in the space since the peak of the bull run in 2021. I similarly share content about what's going on chain and how you can turn it into a hopefully profitable trading strategy. And I also am the founder of a smart money analytics tool that tries to help make that process very simple for people.
Hey guys, I'll go next. Name is Patrick. Started the Dynamo DeFi YouTube channel where I create educational content ranging from beginner to more advanced about how to use different DeFi tools and as well as execute different strategies on chain. Also here on Twitter, I share a lot of insights into on-chain metrics as well as create content on how people can find and assess those metrics themselves.
Hey guys, I'll go next. I'm a research analyst for Nansen Alpha. So over the past 18 months, I've been producing reports for Nansen. Obviously, we are an on-chain data analytics company, so we would do a lot of data-driven research. And I've covered some stuff relevant to this topic, like creating some dashboards around ETH staking, involved with a Pendle report, and recently on Sheath report.
Hi everyone. My name is Kunal. I'm a senior research analyst at Missouri. I've been covering liquid staking tokens for a while. First covered Lido maybe last year in April, and then Rocket Pool. So I'm always I always say I'm a learner in the space, and I'm just starting to explore a bit more of LSD-fi and how they impact the Ethereum staking space and the liquid staking tokens themselves. So. Yeah, that's my background. I write reports similar to what I'm sure most of the people here are accustomed to Missouri reports and our data platform.
Hey guys, I'm Ben. I'm an analyst at Bankless. I write for the newsletter that we have. Mostly just researching tokens, DeFi, staking, gaming, whole bunch of areas. Really great to be here with you all.
Awesome. Thank you for those introductions, guys. Awesome to have y'all here. Like Kunal said, um, just like him, I'm a learner in this space. So usually I'm not the mega brain in the audience. So I like to start it off with some simple questions, and I want to kind of lay the groundwork for what we'll be talking about today. LSD-fi, what the hell is it? What is LSD, LST? Because people also mention that, like you shouldn't focus on LSD, you should focus on LSTs. Um, it would be nice if all of you give us like your understanding of what LSD-fi is, the basics, why it's important, what new possibilities does it bring to the space, why is it interesting, and any one of you feel free to take it away and feel free to build off of each other.
I'm willing to take a crack at it first. So I think first thing people need to look at is the context of how much liquid staking has grown. Because for people who maybe don't know the term liquids, LSD, it stands for liquid staking derivative. And if you just look at the overall landscape of different DeFi categories, then 1 year ago, I don't know the exact number, but liquid staking was a fraction the size of DEXs. At the start of this year, liquid staking was about 50% of the size of DEXs. And then now, as of this morning, liquid staking is larger than DEXs, about $19.4 billion in TVL compared to $16.4 billion in DEXs. And so that's a pretty dramatic shift in the DeFi landscape where liquid staking has gone from being fourth, fifth, maybe even lower rank category to being the largest category by a pretty significant margin. And as a result of this, you have a ton of value now that's in these liquid staking tokens. So that's ST-ETH for Lido, RETH for Rocket Pool, etc. And then LSD-fi is protocols that are leveraging these liquid staking tokens. And that comes in a few different forms. Sometimes that's yield optimizers for those tokens. Sometimes it's protocols like Pendle that tokenize the yield separate from the principal of the token. Sometimes it's protocols like Libra that allow you to borrow or to mint stable coins or borrow using those LSTs as collateral. And as far as the difference between LSDs and then LST, liquid staking tokens, I think it's kind of maybe other people have better perspective on this. I feel like people are using them interchangeably. When I first saw them, people were using LSD to refer to the token of the liquid staking protocol, like Lido, and then LST to refer to the liquid stake token, so ST-ETH. But now I see them used pretty much interchangeably.
Yeah, I guess I can go next. Yeah, that was awesome, Patrick. Yeah, so on the last thing Patrick said, yeah, fully agreed that like LSD, LST are the same thing. Like I think maybe part of it is that people don't want to be calling them derivatives with the vultures of the SEC circling. But yeah, so it's a really, really interesting category of DeFi, and you could argue that most of DeFi these days is just stablecoins and LSDs. Around 16% of ETH is now staked, and that's like a 17% increase since Chappella, which is particularly impressive given that the event is literally the first time that people could sell that staked ETH. And the average price that ETH is staked now is around $2,000, so very close to where we're at today. LSD-fi basically is just protocols that serve these liquid staking tokens. So what's generally being discussed is the new protocols, the new exciting shiny protocols, like I think Raft launched there, There's the likes of Pendle and Unchief. And some of these protocols are essentially just protocols that we have today, except riding the LSD narrative, not really doing anything, but just riding the narrative. But there's some really interesting innovations in the space, like stuff like baskets of LSDs that are seeking to improve the decentralization of validators by having shared liquidity and cheaper swaps between various different LSDs, which is a super interesting concept. There's, obviously, Patrick mentioned Pendle as well, which is basically allowing people to trade the principal and yield derivatives of the underlying assets, which a large part of it is LSDs themselves. And then there's the mature protocols as well, which get forgotten about, but it all is in a bracket of LSD-fi, like the likes of Curve. I think Rapstake ETH today was enabled as a collateral for the Curve USD stablecoin. And the likes of Yearn will be launching their own index of LSDs, which will give you like a risk-adjusted return of the various different LSDs. It'll be governed by the actual ETH rather than the YFI for alignment. And people can, and maybe it can offer quite a competitive rate as well, with revenue from bribes, the aggregate of the yields from the various different LSDs, and then like trading fees on top of it. So there's huge innovations in this that can be from this space. It's like a real fundamental building block now, I think, of DeFi. I think LSDs are up only in terms of market value and staked ETH. And I think a lot of it will fade to nothing, but I think there'll be some really key protocols that arise from it.
Yeah, I think the point about the kind of the up only growth is a big one, because I think like a big reason why you're expecting that, and I know I'm expecting that to be the case, is because the ETH stake rate is like really low compared to all the other proof of stake networks. Kind of like you said, it's like 17-18%, but the average for proof of stake networks is around 60%. So there's like it's possible ETH doesn't get there because its supply is kind of very distributed because it's been around for a long time. But I think like that kind of mean reversion, I think, is going to like drive a big big inflows into liquid staking protocols over the next few months and years.
So there's some like sort of quick math we can do here. If ETH is worth 200 billion and 50% of that is staked, so that's 100 billion worth of assets that perhaps largely these liquid staking protocols will not custody, but like sort of enable to be staked. And the revenue that they generate on this, let's say, is 5%. So 5 billion worth of ETH will be generated or will be distributed every year. And perhaps 10%, like, if you take like Lido's take rate, then 10% of that goes to the protocol. So 500 million goes to the protocol. And all the sort of this Cambrian explosion of apps that we've seen will utilize this like 5 billion, either that goes to the stakers or the 500 million that goes to the protocols, and will build on top of this. So there will be, as some of the topics that have been brought up already, there are like interest rate swaps like Pendle, or like optimizing these yields through aggregators like Index Scoop or maybe Yearn in the future or something. So that's really the opportunity that we're looking at: 100 billion worth of custodied assets and 5 billion worth of revenue that'll be generated.
A lot of great points. On my side, I can add actually maybe a bit more details about the ecosystem of LSD. So for people who are less familiar, so actually you have what I like to call LSD layer ones, who are the protocols who are actually helping running and securing the Ethereum blockchain. And those are in different categories. You have like decentralized protocols, like Lido, like Rocket Pool, Frax, And then you have also centralized exchanges doing that. The most famous ones are Coinbase, Binance, and Kraken. And then you have some kind of independent pools, people who are specializing on that, like Figment and Bitcoin Swiss, who are doing that on their own. They have their own equipment. And so these are what I call layer ones, LSD layer ones. And then these give you actually liquid tokens. And then with these liquid tokens, you can do a bunch of stuff. And that's where actually the layer twos come. And so the layer twos, they are also in different categories. We mentioned Pendle, which actually help you. You can tokenize, they have liquidity pools, etc. You have actually now, there is a bunch of stable coins based on LSDs that are coming, like Libra, for example, Raft, or the new ones. And then yeah, you can actually also borrow money with your liquid tokens. On Aave, you can provide STETH as collateral, and on Alchemix as well. So this is a bit of the landscape of LSC now in general, I would say.
Love it. That's an excellent, excellent overview. I think that really clarifies a lot of what's been said earlier as well. So it's been around for a long time. You know, it's all about staking. It's been around for a while, but lately we're seeing this explosion. A lot of that has to do with the Chappella update, people being able to withdraw, and like this new like resurged enthusiasm for staking. And then on top of that, you built these layer twos, as you call them, which is an interesting way to put it, where you actually have different, let's call it applications, stuff you can do with it. Awesome, awesome. I think this really gives it's a lot. There's a lot in LSD-fi, I think. There's a lot going on. But I think what you guys talked about gives like a pretty good idea of okay, what's going on, and also why there's so much interest in it now because like the numbers are exploding. Um, with with the with the basics being laid out here, I think it would be nice if we talk a bit more about your research, what you guys specifically looked at. I know some of you have looked at a couple of these different projects, like Libra has been mentioned, Raft, but also like the older ones like Curve, etc. I believe Libra specifically is going off the charts. Would be very interesting to talk a bit more about that. But in general, I would love to hear from you guys what you've been looking at specifically and what you've discovered, surprising insights, interesting takeaways, stuff like that. And please do feel free to also engage with each other and ask each other follow-up questions. We're all here just to like learn and have like this collective, mind mend, if you will. And yeah, just learn from each other, have some insights.
Yeah, absolutely. So perhaps I think we're all familiar with Libra. You deposit ETH or staked ETH, and they convert it to staked ETH if you deposit ETH, and you get sort of this yield-bearing stable coin. So perhaps like a question to the panel would be that do you is there a way or like do we understand what the how are people using EUSD? So if I am, let's say, a staked ETH holder and I deposit it into Libra to get my yield in EUSD instead of ETH, how have I transformed my risk, or what is the benefit of me having done that, and where can I use EUSD to participate in DeFi, or is it like a savings rate? How do you guys think about that?
I haven't looked into the very details of Libra, but what I think actually is interesting with Libra is that, and Raft and similar ones, is actually you can, because it's a stable coin, you can actually get, and they're actually giving you yield on top of that, right? So it's kind of like a very passive income based on a stable coin actually that is very predictive and not affected by the volatility of the market. That's my understanding of it, like what it's bringing to the table. I think it's this passive element where you can actually predict that, okay, I put that much money, I get a stable coin, and on top of that, I know that I will be getting that much money on that amount of time. And then actually it's then up to them to enrich the ecosystem and have integrations with other platforms so that you can actually, if you want, you can have it passive, but if you want, you can actually use it in lending and borrowing, trading, whatever you want actually. This is, I think it's, they're just starting, so there is not a lot of integration for now, but I think the goal would be for these projects to have more integration so that people have both the possibility to have a very passive approach if they want, or if they are traders or they want to be more active, they can do stuff with it.
Yeah, just looking at some on-chain stats sort of off the cuff, it looks like about $22 million, or rather $10 million of EUSD is in the curve, paired with about $12 million of USDC. But as far as I can tell, that's actually a relatively small fraction of the supply, and I don't see where the rest of the supply is. So maybe people are holding it for the yield. But if anyone else has any insights on that, would love to hear it.
So my understanding of this is that since holding the token specifically gives you yield, whether that is the staking yield or the token incentives, there is little incentive for someone to swap out of EUSD into another stablecoin. So whether so perhaps it works when it's in a curve pool because at least a part of it is being airdropped yield by Libra, but for any other use, like there is no reason to swap out of EUSD to something like DAI for someone who opened the vault, but DAI obviously sort of moves around freely across DeFi no matter who originally started the vault. But here in this case, the person that opened the vault would like to hold on to their EUSD because they're giving up their yield to that specific EUSD.
I personally think that a interesting application of LSD-fi is being able to dismantle some of the Lido dominance, or at least in some way even the playing field somewhat. So approaches to this are interesting to me, whether or not they'll work in practice and whether or not Lido actually does satisfactorily decentralize in the future to not be a risk to the whole ecosystem. But you can't completely bet on that. So I think the indexes like Unsheath and what's to come with Yearn could be quite powerful in that regard because it makes it so much easier for the smaller cap LSDs to rise in prominence because they have that shared liquidity and it's the liquidity hurdle that they need to overcome. So if protocols that can actually create this shared liquidity, that makes it much easier for these protocols to have that liquidity is really important. So I think something like Unsheath does bring in some governance risk in that regard, like a low cap token, whales could accumulate it and grow the share of the index towards unsafe LSDs, which could cause large loss of funds. But I think a strong community around this and governance minimization over time and further decentralization could be really, really important in leveling the playing field and not having it as a one-man show with Lido. So I'm paying attention to these. I'm not necessarily leaning on like these will be a massive success, but I think in actual innovations around LSD-fi are what's interesting me most and what I'm following.
Awesome. You bring up a great point, I think, that comes up from time to time in DeFi and crypto when some projects become so successful, you have some centralization there, it becomes a single point of failure. And Lido is an example of such a phenomenon. Um, do we think though that maybe some of these LSDs might again, like, systems tend to move towards centralization, and we're already seeing with Libra, it's like usually successful. It really took off, I think. Maybe the same thing will start happening. What do we think?
I hope so. I think that like crypto is completely run on financial incentives, and if things aren't aligned properly, like people will just do what they're financially incentivized to do. And if Lido can offer the highest yields in a sustainable way, then that's what people are going to go to. I think it's like the tragedy of the common situation where people will just follow their financial incentive rather than try and maximize the value of the ecosystem, which is fair enough. So one of these projects really needs to offer a product that is equally as good from a financial perspective and from a sustainable perspective as well, because otherwise it's just not going to happen, in my opinion.
A great point. And one of the things that I'm looking at myself is actually how is money moving within the LSD ecosystem, and where which of the players are gaining momentum or TVL more than others. And one of the things that I've observed is actually so two things. First of all, Frax I think is doing a very great job, and is I would say the only player who is I see as a very serious competitor to Lido. And if you look at, I was looking this morning on their actually staked ETH, and it's actually growing very, very fast. Although it's compared to Lido, is still very small, but I think it's one of the fastest growing in the LSD ecosystem. Also, until very recently, they had a higher APY than Lido, which maybe helped them actually with growing, with getting more TVL. This is one thing. I think another aspect about Frax is that I think they have an entire ecosystem. Frax is not just an LSD platform. They have their stablecoin. They have Frax Swap. They have also lending. So actually, they are very well established in the ecosystem. They have very optimized convex and curve pools. So I think that they can be a very serious player and gain some market share from Lido. This is one thing. And I also would like to mention about Unch because it's very interesting what they're doing with the indexes, and they're actually, their vision is, as they say, prevent staking monopolies from growing too big by incentivizing decentralization. And we come back to incentives that was mentioned earlier. So this is very interesting. It's going to be interesting how they can actually do that. One of the questions for me is that, yeah, exactly, governance is one of the issues that also was mentioned. How are they, like, what is the allocation process that they are using? And this is maybe the main concern. But I think it's a very good initiative to help with the monopoly of Lido, which is a big issue because currently I think they control over 30, yeah, they have 30% of the total staked ETH, which is a big number. And more importantly, there are very big VCs behind it, A16Z, Paradigm. I think they control a big part of the governance tokens, which they are putting efforts into the decentralization of validators, having more of them, but still it's not a process, it's a whitelist process, and yeah, they have the final word on it. So there are clear issues, and an initiative like Unch is very welcomed actually, and also Frax putting effort into that.
Yeah, my take would be, if you look at the top liquid staking protocols, then Rocket Pool and Frax Ether are growing faster than Lido, but Lido is just so much bigger at this point. I think there's reasonable concern that Lido could reach escape velocity, where the TVL is so large, it's such a large proportion of ETH, and ST-ETH is so ingrained in the DeFi ecosystem that it would be, if not impossible, an extremely difficult or extremely long process to sort of remove Lido's monopoly. And we maybe we're already at that point. But just look at, for example, how ingrained USDC and to some extent USDT is in DeFi, despite all of the stable coins that we had come in the last bull run, many of which were more decentralized, since you can't really get more centralized than those two, and many of which provided much higher yield than those two. No one was able to come close to replacing USDC and USDT liquidity in the DeFi ecosystem. And I feel like ST-ETH could get to the same point if it continues growing even at a moderate pace.
That's very interesting. Actually, I have a question, because if we say in crypto everything is about incentives, wouldn't we expect the protocol offering the highest APY actually gaining more momentum or gaining more TVL compared to others? And we saw a lot that on the NFT space when the Blur came, and they had, and OpenSea was a very, very established player, and everybody was using OpenSea. And then Blur came and they proposed better incentives, and all the whales moved actually to Blur for some moment, and then it reverted a bit with OpenSea Pro. But my point is, incentives is actually what moves money, I think. And although Lido has a very big monopoly, couldn't we have like new players? Whether it's with token inflation, which is not obviously not sustainable. I was listening actually to Sam Kazemian, who was talking about actually the high APY offered by Frax, and saying that this is clearly not sustainable at scale, but it's what helps them actually to start and maybe compete. So what do you think about these dynamics?
Yeah, well, I think the first thing is that most yields in crypto, not all, but most yields, especially on stablecoins and majors like ETH, are actually a relatively accurate reflection of their risk. So, for example, let's put aside ETH for a second. If you find a stablecoin pool that has 30% yield, sometimes maybe it's just a new protocol, in which case it won't last very long. But in most cases, it's because either the stablecoin itself or the pool or the protocol it's on carries tremendous risk, and that's why they have to pay that much of a premium to get people to provide liquidity. And so because of that, yes, you could have a new protocol launch, like you've had many new stablecoins launch over the past few years. But at the end of the day, those stablecoins weren't able to suck all of the liquidity from USDC because either people accurately gauged that the reason they had a higher yield is because they were riskier, or in some cases like UST, they were able to attract a lot, but then eventually things caught up with them and it all collapsed. And so, yeah, I just have a tough time thinking that simply a higher yield would be able to attract, for example, $13.5 billion of ETH, which is what Lido has right now. You need something more than that. And even beyond that, imagine you used a new liquid staking protocol to stake your ETH. What are you going to do with it afterwards? With Lido, there's a lot of things you can do with the ST-ETH, right? You can use it to mint stablecoins. You can use it as collateral to borrow. You can use it to provide liquidity on blue chip protocols like Curve. If you have a new protocol that you then get a liquid staking token from, there likely won't be as many options for what to do with it.
Okay, interesting point. That brings up the point Corio also made earlier, that Frax is doing really good. And what you see with Frax is they already have a bit of an ecosystem built out. So the more you can do with it, the more possibilities you have as a user, the more interesting it apparently becomes, which makes a lot of sense. One question, I guess, is doesn't wrapped ETH solve all that? I thought like if you, once you wrap or wrapped staked ETH maybe, once you wrap it, you are free to move it anywhere in DeFi. I thought that was the proposition.
Well, you
at
might be
least.
free to move it somewhere, but that doesn't guarantee that there's going to be protocols that, for example, allow you to use it as collateral or sufficient liquidity to deposit it into a liquidity pool.
Gotcha. Okay, that makes sense. Okay, so we're back to this point where, you know, it sounds like we're all a bit concerned about decentralization around Lido. Um, and we'll have to see if that monopoly will be broken down with these new possibilities. Um, so okay, we've heard about Libra, Frex. Corio mentioned another one. Are there some other standout projects that you guys are really um, excited about? One thing I personally saw, like this brings new opportunities for like kind of like index funds. What do you guys think?
Yeah, I know. I'm very excited about some of the kind of the new LSDs that are kind of in the works. I know one I'm excited about, Stakewise. Well, they have right now they have Stakewise V2, which is kind of definitely one of the smaller LSDs that's out there, but they're working on a new protocol, their V3, which it's kind of similar to if you guys remember Rari Capital, their fuse pools. It lets anyone create their own kind of isolated custom staking vault, which I think is really interesting and could potentially like I don't make it a lot easier for kind of solo stakers and different entities to kind of participate in liquid staking. I know that's one I'm pretty excited for. I'm also excited for Diva, which is using a distributed validator technology, or known as a DVT, to kind of help build out their LSD as well. So those are two that I'm pretty interested in and looking forward to.
Okay, so these potentially bring some democratization, let's call it that, to the space. I'm wondering if that's like this, the last thing you mentioned is the same as permissionless nodes or not. Also, I saw someone else open the mic, or put on their mic. Feel free to carry on.
I was just going to briefly say that I think a lot of the LSD-fi protocols are really uninteresting and aren't adding any value. They're just kind of copy paste of other DeFi protocols that are writing the narrative by like having like only LSD like collateral and stuff like that. But the ones I'm trying to pay attention to are just ones that are doing different stuff. Like, you know, Pendle is one that's interesting. It's like kind of the first yield trading protocol that's gained real traction. So following that quite closely, and yeah, then like I've mentioned the index products like Unsheath as well. So I'm just trying to follow the ones that are actually innovating and could then I feel like the ones that can create real value through innovation can be really great plays for the next run, because obviously LSD-fi is going to be so huge. So that's what I'm trying to look out for and trying to cut through the noise of like the copycat protocols that are just trying to write the narrative.
Yeah, that's a good point. Like, I feel like all of the attention gets pushed towards the what we kind of laid out as like the layer 2 LSD-fi projects, when in reality, when you look through them, it seems like 90% of them are, like you said, copy paste, or are going to do something just unsustainable to generate TVL quick, and then it will flow away. so I think it's kind of interesting. Like, despite all the attention in the space, I think like the more established like funds and kind of just more established like on-chain traders are not really allocating to a bunch of these. I think like the people that have been around a long time are only going to pay attention to the actual layer one, the established players like Lido and Frax, because it's outside of just two or three projects in the layer two side of things. It's tough to tell what's actually going to be, going to have like sustainable competitive advantages going forward.
I agree with the points. On my side, you asked about the projects, except those we already mentioned. There are two that look a bit interesting. One, I would say, is Parallax, which is kind of actually an optimizer for yield. On LSD, they do like auto compounding and this kind of stuff. This is one. They are launching, so that's going to be interesting on Arbitrum and ZK Sync. Another one is asymmetric, which they have a funny idea actually, from what I understood, is that it's mostly for retail. So you can actually stake as low as, I think, 0.1 ETH or something. And the idea is that, well, you don't have a lot of money, so that's like 5% or 4%. It's not going to change your life. So what they do is kind of like a lottery where, all the people put their ETH and the entire rewards every week goes to one single like lucky winner. And this is like a kind of, as Unchained said, I don't know how sustainable is that. Maybe it's just a hype and writing the narrative. But that was a funny idea. It looks interesting, for people, for retail people. Is a different idea. Yeah, those are two that were a bit different from the others that were already mentioned.
Asymmetrics caught my eye as well, just simply because so much of crypto is driven by people who are interested in making it big, and that just distills it to its purest form. Also, if I recall correctly, I think they give token rewards for their governance token to everyone, whether you win or not. So you actually do earn yield from that, although it's inflationary yield. Another interesting one I saw was Flash Stake, which lets you lock in yield up front by locking your ETH and then locking the APR up front, and then they pay you now in exchange for locking your ETH. And then if you want to withdraw your ETH early, you have to pay back part of the yield.
Yeah, I've seen these examples as well. Like both of them, like asymmetrics, kind of like the lottery one, and then the one that lets you lock up the yield right now. Um, okay, so on one hand, lots of interesting things and innovation going on. On the other hand, it's also a lot of copycatting going on. Let's call it that. Um, which I guess is we see this, I think, with every hot narrative, like NFTs also garnered like a bunch of blue chips, but while it was hot, there's like so many things going on and scams and projects that aren't around anymore. I guess it's also a bit of like the natural cycle of things, and then time will kind of tell, what is supposed to like stay around, what has true value, and all the other stuff will kind of fade away. Um, yeah, with that, I think we're also a bit talking about where do we think this will go, right? Is it too early to call LSD-fi summer, or is that pretty much a given already? What do you guys think? Where do you see this going?
Well, personally, I feel like we're in a bear market, and to an extent, we're kind of in an LSD summer. As in, like, it's pretty much what everyone's just talking about. it's where the attention is, and yeah, it's getting a lot of attention. So it is a bear market thing. So the way I'm looking at it is that there's going to be some very interesting protocols that arise from this, and they could be really excellent plays in the next couple of years when we actually get a proper crypto summer. But yeah, that's just me.
Yeah, I mean, it almost feels like I don't want to say a forced narrative, but given that there's just nothing else going on other than relatively bad developments, I think I think this will just eat up a lot of attention over the summer, given there's nothing else really going on, and we've been kind of exhausted in terms of both catalysts and narratives now for a little bit.
On my side, I would say I slightly disagree because I think that one of the big things is what is the what are institutions doing, what is the big money doing, etc. And if you look at the bull markets, a lot of institutions or funds or those with a lot of money, they usually don't do very risky moves. For example, you have some funds who are just into Bitcoin and nothing else, and then like in the last bull market, we saw that some of them they were also allocating to Ethereum, and so the thing is that when you have that and you have Ethereum, and now it doesn't make sense actually to just hold Ethereum because you can stake it and then get the staking rewards. You're exposed to Ethereum. On top of that, you get the rewards. So I don't think this is a temporary narrative, at least for the layer ones. I'm not talking about the layer twos, the copycats, all this kind of stuff that we talked, but about the real, like the big project of LSC layer ones. I think that they are a very big part of the future of DeFi. That's my opinion, and I think that not only for funds and institutions it's going to be important, but also for protocols themselves. A lot of protocols under treasuries, they have exposure to ETH. Because either they're on Ethereum blockchain or it's just a blue chip token that you want to hold. It's stable, relatively less volatile than others, and so it doesn't make sense to just hold ETH. It makes better sense to have some kind of either if it's a basket of LSC layer ones or one particular project, SCETH or whatever, and I think this is going to only grow with time. And we were mentioning that only around 17% of the total Ethereum is staked. I think this number is going to grow, and this means that this narrative is not going to go away. Now, how it will be transformed in the future, what other players will come, what innovations, etc., I don't know, but I think this is something that's going to stay there for a long time, in my opinion.
I definitely agree. Like I said, the DeFi summer had maybe 2,000 new protocols come out, but the 20 that survive are still excellent and are still around. I think we'll see something similar with LSD-fi, and it's real innovation, it's real technology. It will be really useful, but it's not necessary that all of the protocols will make it. But the ones that do will actually have a significant impact.
Yeah, I agree pretty much with what everyone said. Yeah, I feel like we're kind of in a LSD-fi summer. But yeah, I think like a lot of the ones that are just kind of like latching onto the narrative won't make it, but the ones that do will be like real kind of like powerhouses within the space.
Awesome. Yeah. Okay. So a couple different takes, but I think everybody kind of agrees that we see an explosion of different protocols and projects. Most of them will remain, but after everything's said and done, we'll have a couple new powerhouses, and it also really changes the game because like if you can have ETH or yield bearing ETH, which one are you going to do? It's obvious. and that impacts a lot of treasuries in the space, et cetera, et cetera. Awesome. Okay, we had a very interesting talk about LSD-fi. I think we all understand a bit better, at least, everything that's going on here. Also, the biggest projects in the space who are doing really good and which are interesting to look at. I think that's great value to our audience. I think it would also be cool if all of the speakers, because today we talked about LSD-fi, but it would be nice to know what else you guys are working on and where to best find that work.
Sorry, do you mean what we're personally working on, or which other narratives we're watching?
Could be either. I meant it as like what other analysis or reports or are you working on right now? But it could also be just like things that you're following, stuff that captures your interest right now.
Got it. Well, I would say just personally, I'm most interested in liquid staking. I also just think because of the huge mainstream narrative surrounding AI right now, that cryptos that either try to somehow help AI or somehow leverage AI related APIs are probably going to continue to gain attention. And then another one that's interesting is real world assets, right? You have some interesting projects that have been gaining traction as far as tokenizing securities, tokenizing US treasuries, and tokenizing real estate. And that's most of what I'm looking at right now.
I too am just yep. I think Patrick brought up a bunch of good points. AI is obviously a hot narrative, but the one that I'm paying most attention to is still liquid staking and LSD-fi. So expect a report from Missouri sometime next week. And to follow me, you can just follow my Twitter and follow Missouri Crypto Twitter. Subscribe to our newsletter and give us all the feedback that you have on our research and data, and that's the most useful. Thank you for having me on.
Yeah, for
So
me, sorry, go ahead.
yeah. So for me, outside of LSD-fi, I'm pretty interested in gaming. So like on-chain games and autonomous worlds. I think are really interesting. Yeah, if you want to kind of keep tabs on what I'm up to, just follow my Twitter, follow the Bankless Twitter, subscribe to our newsletter, subscribe to our YouTube channel. Yeah, but yeah, thank you for having me on the space. It was a great conversation.
Yeah, so for me, from a narrative perspective, LSD-fi is obviously the most interesting and relevant at the moment. What I'm interested in at the moment of just learning about is some of the privacy solutions that are coming up. A lot of them are in development, but I think there's some really cool projects being built in the privacy space. I think, like for example, Penumbra is something that I'm looking at as something that's interesting to me. But in general, at Nansen, we do on-chain data-driven reports. We try and make them actionable. So yeah, do check out Nansen Research. It comes with all the dashboards as well. So yeah, we try and make actionable data-driven reports.
On my side, I'm actually all into narratives, and I regularly look deep dive in different narratives. And recently, I've been looking into the app chain narrative, which seems very promising to me. And so I'm going to share soon a thread about this. So you have actually layer 1 app chains like Cosmos SDK, but you also have like layer 2 app chains like OP Optimism Stack. So that's very interesting. I think development that's I think in the future, especially in the bull market and with the gas fees, we're going to see a lot of movement around app chains, like we saw with DYDX, etc., and some gaming And I'm also actually looking more closely into zero knowledge. I think this is one of the most important technologies involving blockchains. So I've been doing some research and sharing them and about ZK, multi-party computation. And now, more recently, I've been looking into the smart contract privacy part of it, which is very interesting. And so if you want to see all of that, you can follow me on Twitter, on my newsletter, and on Dune. I'm also pretty active on Dune dashboards, so you can have a look there, specifically on the narratives. I recently shared a Dune dashboard around that. And yeah, as always, thanks for having me.
Yeah, for me, I don't really see any other interesting narratives other than LSD-fi. The only one I'm still trying to get my hands around, and I haven't seen many people talk about yet, is any innovations going on top of Uni v3. Like one in particular, I'm interested to see how it plays out is something like Limitless that's going to potentially have the closest product to options that people will actually use is how I would frame how it could work. And so we'll see how that goes. But yeah, you can follow my work on Twitter, my newsletter, and then I have a analytics dashboard as well called Chain Edge, where we follow the top DEX traders in the world and kind of segment them into how they're making their money and trying to help you find signals in that data.
Awesome. Thank you, guys. Thank you for being here. Thank you for sharing your insights. Some of you recurringly, like coming back on this spaces lots of times. Really appreciate that. Also, big shout out to the new speakers we had today. Really appreciate you guys coming on, and can't wait to have you back. To the audience, definitely give these guys a follow if you want more of these insights. Also, next week, we'll be doing a space on the whole thing with the SEC, obviously, Binance and Coinbase. We'll have a couple reporters and hopefully some analysts as well to bring you some evidence-based takes. So to get more of those, you can follow MetricsDAO, stay up to date more. We also do like paid analytics challenges and education. We have a Discord. I also do this weekly Twitter space. So if you enjoy these, give me a follow at HLX19 on Twitter. Um, I really love bringing the Web3 analytics space together, get big and relevant players together and share some insights and have a good time. So that's what we're going to keep doing. Thank you for being here. And until next time, bye-bye.